Hey guys, welcome to another beautiful day and another beautiful webinar. It's been a while I've had a webinar. Been extremely busy, but I'll do my best as much as possible to throw in one every now and again. At the moment, I don't even know how many I put in every month. Maybe it's every other month now, but I'll do my best to do it one every month and see if I can get back up to one every week. Not personally myself, but probably find you know, a way or an angle to make this continuous for everybody. So if you've never been here before, welcome. And if you've been here before, thank you for still being with me. Now, when it comes to tradable or let's call them investable assets, you have the currencies, you have the stocks, you have the indices and all of that stuff, right? And each one of them have different win ratio. For the guys that started with me, we started with FX. We did a little bit of stocks. We have cryptocurrencies, we have indices. But because a lot of people enjoy FX, I tend to, show more on FX primarily before. But the truth is, over a period of time, FX isn't the most sustainable. And this is me being honest with you guys. Because the win ratio in FX is between negative, I think negative 5% to positive on average, positive 2 point something percent, or medium 5%. And when you get the JPYs in extreme cases, 11%. So if you think about an asset that if you put your money there, you only get an 11%, at maximum at the what's it called? At the end of the year, would you really spend so much time sitting around doing it? I mean, if you have 100 million US or GBP, then you might consider doing that. That's 10M. It's not bad. But for guys that are very small in the market, I say your time is best invested somewhere else, right? The other stable assets, S&P 500, you know, you have DGIs, you have NASDAQ, you have so many stocks listed. And you just have to find what works best for you, right? So personally, because I don't have much time, I decide to have machines handle most of my tasks for me, right? Now, I still have in mind to expose some of those to you, but I have to find the perfect balance. I don't want to rush it. I want to take it, as life wills it, as God wills it, as Allah wills it, and let's move forward little by little. Now, let's look into something very interesting. See these assets right here, right? Let's say Dow Jones, right? If you've known about seasonality before, um, for those that haven't seen seasonality before, let me show you what seasonality looks like. So this is Dow Jones, for example, and this is what seasonality looks like. It looks something like this. And what we're trying to look for is wherever like in this case, 70 years, 15 years, and 5 years, wherever they correlate, like let's say right here, we tend to want to write it up. And then when they don't correlate, you want to get out of the market or you don't go in the market in the first place. You get it? So you're only looking for where they all correlate together, then you take that right. Right here, for example, right here, they're all going up, you take that right. So if something's been happening for the past 70 years around this period, the possibility of it continuing it is high. Just like your seasons, right? You have winter, summer, autumn, and spring. That's been in play for how many years? How many centuries? How many decades? So humans also have to follow certain rules, right? And that's the rules of seasonality. Just something that's happened before, possibility of it happening again is high. Now we've transmuted seasonality into something even more beautiful. and we had the probability. But now what happens when you mix seasonality and probability together? That's something very beautiful, right? Now, those I don't know what probability looks like, just for example's sake, I'll go here. We don't have the latest probability at this moment. I think we had up to last year, and this is because of I'm being extremely busy. Uh, so let's look at when was the last time I ever done this one? Okay, so this probability is at 2022, for example. But probability, the ideal is it gives you what percentage price is going to move on a specific date. So we normally have 1 year ahead, but now because I've been extremely busy, so I haven't had much time to get these guys in play. And they're quite expensive as well. So what it does is it tells us like this day on February, for example, we have a 59% chance if we go buy and all of that. Now, what if we could, rather than look at it from this time frame, we can look at it from a different angle, probability, mixing it with seasonality together. So let's look at this. I have a note up right here. See right here, we're looking at DJI right now. November, if you look at November, it seems to always goes long, right? So let's look at last November and compare it every single time. So DJI in November, it normally goes up. So, okay, this is November, right? 2024 November, DJI went up. Let's go to 2023 November. 2023 November, it went up. 2022 November, see it again? But 2021, it's not going to happen every time. You get so all up until we've got 3 gone buy, 1 gone sell, right? Now let's go further. 2020. Look at that. November again. Buy. Let's go November again. See right there. Buy. You're getting the gist, right? November again. Look. Buy. Right? So up until 2018, right? If we look at 2018 to 2024, that's 8 years. In 8 years, you go 7 buys already, right? You get what I'm getting at right here, right? It's not gonna win every time. Remember. Look at that again. Buy. You get the gist now, right? And you see that again, buy, right? So what I'm trying to show you here is quite simple, right? Uh I'm trying to tell you that you don't have to always be in the market 247. On November, you can just come buy this, get out of the market. Now, the good thing is we have robots that go in. So you can just program it in November, and every November, I start looking for that buy entry for you. Right? And when it gets the buy entry, it takes the stuff and then it's out, at the end of November. Or whenever it feels its best in November to come out. You get the trick now? Now, just to show you that it's not an isolation, right? Let's look like QQQ, right? It says July, right? So QQQ. Let's look at July. That should be 7, right? All right, July. So July last year. So what we're seeing here in July last year, it went sell. Remember though, what we're looking for is buy, right? So we said last year November didn't go our way. About a year before that. Look at that, buy, right? First buy. Okay, let's say 50-50, right? Look at that again, buy. Oh, now we're looking very good. Okay. Remember, market is a casino, man. Don't let anybody lie to you. It's a big casino. We're playing a game of chance right here, game of numbers, right? So your strategy has to be effective enough to accommodate some losses, right? But that's all you need to know, literally. Just be able to accommodate your losses, and that's it. Look at that again, buy, right? So we now have 3 versus 1, right? If you're playing football and you're already leading 3-1, right? You know what we're talking about now, right? Look at it. It's a dodge candle, so it's nullified. All right, let's go. July, right there. Buy again. You get it? Let's keep going. Some of this I've not looked at it all the way through. So July, buy again. Uh, Look at it again, buy, right? Up to 2016, right? Just like the same time we looked at that, the other one. So that's like 8 years straight, and it's all buy. See if we can get one. Maybe we'll see a sell. No, buy again. So up on 2015, in 9 years, you lost one, you get, and you won eight. So if you have a strategy that is good at catching the downside, you don't even need a strategy that catches the downside. You only need a strategy that catches the upside, but you need a strategy that minimizes loss, just in case you have that one downside. So you don't want your account to go. But at the end of the day, just one time, that's one time you trade every year. And if you maximize that, you can make a lot of money because it's a month period, right? It's not just a day period. That's a monthly candle you're looking at. Now let's look at SPY. All right. SPY. Let's see what you say. Now, if we're looking at the SPY records, we're looking at November is the best time to go buy. So let's see what we got for SPY in November. Buy. Oh, no, no. Yeah, right there. Buy. Right? First one. Let's go again. Buy. Oh, no. Look at that again. Buy. Oh, no. That's three now, right? Oh, no. We lost this one. That's 3-1, right? Oh, no. We won. 4-1. Oh, no. We won. Oh, 5-1. Oh, look at that again. We won again. 6-1. You're getting the point now, yeah? 7-1. 8-1. You get the point. Let me just look at the last one. Dutch candle nullify. So in 9 years, right? 8-1. Right? In 9 years, we won. Wait, yeah, 8-1. So it's quite obvious, right? When you look at it. Oh, no. Whichever way we look at it, I think I'm trying to calculate because we have one Dutch candle. I think 8-1 or 7. 7-1, one draw and one loss, right? In this asset. Now, if we're looking at that, right? I've shown you 3 assets to show you that's not a fluke, right? Market has its own season. Now, mixing seasonality with probability is very dangerous too. And this is what's giving us right now. So I hope this helps someone. I mean, you can always jot it down. What I'm just giving you right now is free money, basically. If you know what it is, you know what it is already. So when this period comes, you just go there, go take the asset, go do what you need to do. If you do that over time, you should be fine. I mean, for a lifetime, literally. All right, guys. I mean, until they switch it up. But please listen, quick disclaimer, even though this is coming at the end, right? And the disclaimer is already in the description somewhere in there. So this is educational purposes only. It has nothing to do with, I'm not giving you any financial advice or telling you to do this or do that. This is just my own personal outlook to the financial market. So that being said, do whatever you must with the information that's been provided to you. It's provided to you for free. So I presume you should use your mind when you get stuff for free. All right. Thanks very much, guys, for watching, and I'll catch you in the next one. Thank you very, very much.